Hey guys, welcome back to another video from the Maestro Speaks. How y'all doing, man? How y'all doing? Yes. All right, now we are looking at, well, me, not we, well, we, but me, because I'm talking to you guys. I am looking at the GBPNZD currency pair. I'm going to do somewhat of a top-down analysis. Basically, what I'm looking for, what I anticipate happening with this pair moving forward. All right. Now, before I go any further, I would like you guys to please comment and subscribe and like my videos because what it does, it encourages me to keep coming out here and dropping gems on you guys, man. All right. I hope you guys caught that Aussie New Zealand move with my last video. Anyway, now this. We are at the monthly time frame looking at this pair, and I have my little lines, of course, drawn. All right, like I always tell persons, I love to analyze currency pairs using top-down analysis, but I like the higher time frames because the higher time frames tend to cancel out all of the noise and all of the, just all of that fluff, nonsensical fluff. Because now what you have is price action staring you in the face and it takes out all of the guesswork. All right. Now, that being said, this particular currency pair has been um, ranging somewhat. You had a, upward movement out of the consolidation and then back into the regular flow of things for months. All right. For example, this this area here, this area here. You have the market ranging, not going anywhere. But on the monthly time frame, however, it was moving. You had the double bottom, shoot up, breaks the area, goes all the way back, not a back, but up to this area of resistance, which was resistance before, resistance. I look to the left. All right, I'm a support and resistance trader, price mixed with price action, and I use little to no indicators. Only the Fibonacci I use. I don't really use no other um, instrument on my charts. Okay, so you have this double bottom. You have this resistance area up here. The market breaks down, comes back down to the same area of support. See, support. You got support here. Then you have an upwards ascending channel. You had this upward ascending channel and it gets to this area of resistance in the market, and then you have a bearish engulfing candle. Now that's critical. That is critical because it happened at the area of previous resistance. It happened at the area of previous resistance. Look, I'll say it again, resistance here where it happened, resistance, the area itself, resistance somewhat, but a slight push up, but a push back down within the area. So as you can see, resistance again. As you can see, this area is very important. And the traders who trade this particular pair, they see this area as a crucial area. And that's why that's why the bears took over. Okay, the bears were waiting patiently. And look what happened. You have that. Now, this market now you have, because I'm going to stroll down, scroll, stroll. I always get those words mixed up. It is scroll. Jeez, my wife is correcting me again. It is not stroll. It is scroll. Scroll or stroll? Scroll with a C. Scroll. Oh my goodness. I am a mess with that word. Anyway, I am going to scroll down to the weekly time frame. All right. But before I scroll down to that weekly time frame, I know a lot of traders probably gotten right here. They would have gotten right here for a sell because what they were going to do, I'm telling you, the higher time frame traders, the monthly traders, they got in right here, and they was anticipating the market to actually uh, go all the way down to that level of support. You see? But the market tricked them because when you have a break in an ascending, sorry, in an ascending channel, when you have a bearish engulfing, most times the market would want to test that area. You see what I'm saying? And then what you do, you have the break and the retest. After the break and the retest, then you enter in um, for the position that you the direction that you're anticipating the market to go. So let me scroll. I gotta practice that word, people. Don't laugh at me. Yeah, so I am going to go to the weekly time frame and show you what I'm talking about. Look, you have, and I have it drawn out already. I got my little box right there too. Um, you have the market was going up. See, you have this area, potential double bottom, because you have this bullish engulfing candle at the area of support, which is good. But of course, you had indecision. But of course, there was some potential in upward mobility. But then the market kept going up. It kept going up, kept going up, kept going up, kept going up, because the sentiment was that the market had reached its area, all right? And it wasn't really going to break this area. So it trended up for quite some time, for quite some time. And it's at this significant area. And then you have this right here. See? Bearish engulfing candle at the area of resistance. Then you have another bearish move. And these are weekly candles. However, when you have the break, then you got a retest. Now, this candle is interesting. But when I scroll down to the daily, you know, it's going to show something different, you know. But what I did, I took out I took out my Fibonacci retracement tool, and what I did, I just drew from the swing high to the swing low, and there you have it. You have the golden area right there. So I just mark because what I like to do, I like to let the market come to me. Right? I like to now the market doesn't necessarily have to come to me, but I just do that just to safeguard myself, and I let the market play to my rules. So you have the break after the ascending move. But see, but you like I say, you got this area you got to concern yourself about, and it actually reacted the market itself. You have break. Now you have a little slight retest. I'm anticipating it could go continue to go down, because long term, I'm telling you now, based on this particular pair, structurally speaking, I am anticipating this market to just to go all the way down, possibly to this area right here. That's structurally speaking. It doesn't have to do it, but structurally speaking, I see the market is setting up. I see the market is setting up. All right. Now let me scroll down to, I think I'm gonna get that word right. Trust me. I think by the end of the year, I will not say stroll for scroll ever again. Now, interesting thing happened today. All right. Interesting thing happened today. You see what I'm saying? The break, the market finally broke this structure here, because the structure here was upward ascending channel. Broke, then you got down. Bulls came in, took the market up. The bears say no, but then you get the bulls saying yes. You see what's going on here on the daily time frame. Now this is the daily. I'm not going any lower. This particular, and it's actually a bullish engulfing candle because the market ran out of steam here for the downward move, and then you got this bullish engulfing. So I'm watching this. because you don't have to trade it, and I don't have to trade it, but I've already set my rules in place. All right, just in case the market decides to do exactly or almost what I wanted to do. You got to see you have like a double bottom setup right here after the break. All right, after the break of this ascending channel, you have the double bottom formed, and then you get the bullish engulfing. So I'm anticipating the market to probably go up one day, maybe 2 days, and hopefully it could at least tip the golden zone, the Fibonacci retracement golden zone. What I'm going to do, I'm going to take out the fib again and show you the fib, believe it or not, is somewhat like a blueprint of the market, y'all. That's why I use the fib along with market structure. See, boom, Fibonacci, swing high, swing low. You got the 50 and the 61.8 level. All right, I put my little rectangle right there. So I want the market. This is what I want to happen. I want the market to show its hand, and at least because I do not want to sell here. I do not want to be a seller here. As long, watch this now. I want you to listen to me carefully. As long as this market doesn't break this area structurally, when I say break this area structurally, as long as it doesn't pull back and pass this area and goes above, we good. Because see, it has to then pass this area for it to be considered bias territory. So as long as, yeah, as long as we have the market below this area, we good. So if we're waiting for is the area at least to come and to retest this area right here, hopefully to at least touch the golden zone, show some type of either indecision candle and then a bearish engulfing or a bearish engulfing. All right, that's what I'm waiting for. But I anticipate, and it's just me, trade at your own risk. I'm waiting to become the seller. I'm not a buyer. I'm not a buyer. I'm waiting to become the seller right here in the, or at least within this area. Once the market reacts in this area and shows its hand, then I will become the seller. And I would then ride this market down long term to the next level of support. Plus, to play it safe, you could ride it here, but let me go off the weekly. Let me show you. Because I really love what the weekly market shows. All right, you see this? Boom. If the market gets, see my little rectangle right here. Let me take the, oh Lord, I got the flip chart. Yeah. You guys can see this. If the market comes all the way back up here, or within the, or even at the 38, but I like the 50. That's my rules. And it shows something interesting. What I'm gonna do, I'll then get in for a sell from here, and I will possibly ride the market all the way down to this area of support. And that's just me. So that's it, guys. So I would love for you guys, like I say, to like, comment, and subscribe, and hit the notification bell. We out here. You guys enjoy your weekend. And you guys, please stay safe.